Are you looking to profit from the growing green energy sector while also making a positive impact on the environment? Investing in green energy companies may be a good option for you, but it's important to understand both the opportunities and the risks before diving in. In this video, we'll explore the potential benefits of investing in green energy, including growing demand for renewable energy, government incentives, and expanding global markets. We'll also cover the potential drawbacks, such as technological and regulatory challenges, competition, and market volatility. As concerns about climate change and the need for sustainable energy sources continue to grow, many investors are looking to green energy companies as a way to potentially profit while also making a positive impact on the environment. However, investing in green energy companies carries inherent risks and requires careful research and planning. By understanding the opportunities and risks, you can potentially make more informed investment decisions. We'll look at some big stock moves made in this sector last year, and we'll provide some help on where to best research for finding best investments in green energy companies. There are several opportunities of investing in green energy companies. Growing demand for renewable energy. As countries and businesses transition to cleaner energy sources, the demand for renewable energy is expected to continue growing. This presents an opportunity for green energy companies to potentially increase their revenue and profitability. Government incentives. Many governments around the world offer incentives for the development and use of renewable energy, such as tax credits or subsidies. These incentives can help green energy companies lower their costs and increase their profitability. Environmental and social impact. Investing in green energy companies can potentially have a positive impact on the environment and society. By reducing greenhouse gas emissions and promoting sustainable energy sources, green energy companies can potentially contribute to a more sustainable future. Increasing adoption of electric vehicles. The adoption of electric vehicles, EVs, is expected to increase in the coming years, as concerns about air pollution and climate change drive the shift towards cleaner transportation. This presents an opportunity for green energy companies that produce or supply charging infrastructure or batteries for EV. Decentralization of energy generation. The trend towards decentralization of energy generation, through the use of distributed energy resources such as solar panels or small-scale wind turbines, presents an opportunity for green energy companies that produce or supply these technologies. Increasing focus on sustainability. As concerns about sustainability and environmental impact grow, more businesses and governments are focusing on reducing their carbon footprint and increasing their use of renewable energy. This presents an opportunity for green energy companies that can offer solutions to help businesses and governments meet these goals. Expanding global markets. As the demand for renewable energy grows globally, green energy companies may have the opportunity to expand into new markets and increase their revenue. There are also several risks of investing in green energy companies. Competition. Green energy companies may face competition from other green energy companies, as well as from traditional energy companies. This can potentially impact the company's market share and profitability. Dependence on government subsidies. Some green energy companies may be heavily reliant on government subsidies, such as tax credits or grants, to fund their operations and projects. Changes in government policies or budgets can potentially impact the availability of these subsidies and the company's financial performance. Market volatility. The green energy sector can be subject to market volatility due to factors such as changes in energy prices, technological advancements, and global economic conditions. This can potentially impact the stock price and financial performance of green energy companies. Technological risks. Green energy technologies, such as solar or wind power, can be complex and may face technical challenges or setbacks. This can potentially impact the company's ability to deliver its products or services and its financial performance. Regulatory risks. Green energy companies may be subject to regulatory risks, such as changes in environmental laws or permitting requirements. These changes can potentially impact the company's operations and financial performance. It's important to note that this is not an exhaustive list of risks associated with investing in green energy companies, and investors should do their own research and due diligence before making any investment decisions. A number of green energy companies have made significant moves on the stock market in recent years. Here are a few examples. Tesla is an American electric vehicle and clean energy company that has seen its stock price rise significantly in recent years. The company has disrupted the traditional automotive industry with its electric vehicles and has also expanded into solar panel and energy storage systems. Tesla's stock price has been volatile. It has also seen both significant growth and overwhelming decline over the past 5 years. SunPower is an American solar energy company that designs and manufactures solar panels and solar systems. The company has seen strong growth in its stock price over the past 5 years as the demand for renewable energy has increased. Vestas Wind Systems is a Danish wind turbine manufacturer that has seen significant growth in its stock price over the past 5 years. The company has a strong presence in the global wind energy market and has benefited from the increasing demand for renewable energy. First Solar is an American solar energy company that produces solar panels and provides solar power systems. The company's stock price has seen strong growth over the past 5 years as the demand for solar energy has increased. Plug Power is an American clean energy company that develops and manufactures fuel cell systems for the transportation and logistics industry. The company's stock price has seen significant growth over the past 5 years as demand for clean energy solutions in the transportation sector has increased. Enphase Energy is an American renewable energy company that specializes in solar energy systems. The company's microinverters, which optimize the performance of solar panels, have been well received in the market. Enphase Energy's stock price has seen significant growth over the past 5 years. Here are a few places where investors can do research on green energy companies. Many green energy companies have their own websites where they provide information about their products, services, financials, and business plans. This can be a good starting point for investors looking to learn more about a specific green energy company. Publicly traded green energy companies are required to file periodic reports with the SEC, including annual reports and quarterly reports. These reports can provide detailed information about the company's financial performance, business operations, and risks. Investors can access these reports through the SEC website or through the company's own website. There are a number of industry trade publications that cover the green energy sector, such as Renewable Energy World, Green Tech Media, and PV Magazine. These publications can provide news, analysis, and insights on the green energy industry and specific green energy companies. Many financial news websites, such as Bloomberg, CNBC, and the Wall Street Journal, cover the green energy sector and provide news and analysis on specific green energy companies. There are also a number of websites that provide stock analysis and ratings on green energy companies, such as Morningstar and Yahoo Finance. These websites can provide financial data, analyst opinions, and other information that can be useful for investors. It's important to note that no single source of information is a definitive guide, and investors should do their own research and due diligence before making any investment decisions. Hope you liked the video.